Hey, Jack here. If you're within 10 to 15 years of retirement, this video is for you. There are a few financial moves you can make right now that can dramatically improve your future lifestyle, stability, and peace of mind. So let's walk through 4 smart strategies you don't want to miss. Move number 1, buy permanent life insurance early. When you're young and healthy, it's the best time to lock in permanent life insurance. But I'm not just talking about life insurance for a death benefit. I'm talking about a properly structured, high early cash value policy that acts more like a private reserve of capital. This gives you access to liquidity throughout your working years to fund major purchases or invest in opportunities outside of the stock market, like real estate syndications or even your own business. Also, it can be a pool of capital that can help your kids fund things like education or weddings without having to pull from retirement savings or take on risky debt. And later, this cash value becomes a tax-free income source and volatility buffer when markets are down in retirement. Plus, it's one of the most efficient ways to leave a legacy for your heirs, completely income tax-free. The earlier you start, the more powerful it becomes. Move number 2, use fixed index annuities to lock in retirement income. As you approach retirement, the 5 to 10 years away mark, you want more than just growth on your investments. You want to guarantee your income. These are vital years where a market drop can have an outsized impact on when you can retire, how much you can retire on. So fixed index annuities are powerful tools because they grow your income benefit base at a guaranteed rate. A lot of contracts I see are bumping that benefit base by 7% annually for the first 10 years or until you start that lifetime income stream. And these annuities do allow you to lock in a lifetime income stream, often paying out 6 to 8% in terms of withdrawal rate, which is 2 to 3% better than what you can get if your assets are all invested in the market still. With these, you also protect against market losses. You can track growth of indexes like the S&P 500 up to about 8%. There are also uncapped options as well, but you have a 0% floor, meaning if the market drops, you just get a 0 credit. You don't actually lose money. These can often provide enhanced payouts as well if you need long-term care, like losing the ability to perform 2 out of 6 activities of daily living. So think of fixed index annuities as your personal pension. And in today's high interest rate environment, the payouts are some of the best that we've seen in over a decade. Move number 3, build a strong cash reserve. Many people are invested heading into retirement, but not liquid. And you need a healthy cash buffer to handle unexpected expenses, market volatility, or personal emergencies without having to sell investments at a loss. A good target, have at least 12 to 24 months of living expenses set aside in safe, easily accessible accounts. Think like high yield savings accounts, money market funds, short-term CDs, because liquidity gives you options and peace of mind when you need it most. Move number 4, eliminate debt and lower your fixed expenses. Finally, you want to enter retirement as lean as possible. Paying off credit cards, auto loans, even your mortgage if it makes sense, can lower your monthly survival number. This gives you a lot more flexibility on how much you need to pull from your investments each year, especially during market downturns, and you can rely on those investments more to fund fun things like trips, subscriptions, memberships for gyms or golf, and rely more on your annuity, fixed income stream, Social Security to cover those baseline expenses. Less fixed debt equals more financial freedom. To recap, start early with permanent life insurance, lock in a guaranteed income through fixed index annuities, build a strong cash reserve, and simplify your balance sheet and reduce debt. Retirement success isn't about hope, it's about putting the right tools in place ahead of time. If you'd like help mapping out your own personal retirement strategy, or if you're curious how these tools might fit into your plan, I'd love to be a resource. You can click the link to schedule a free strategy call with me below. Look forward to chatting soon.